Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with Trade the Chain and Market Rebellion. My name is Nick Mancini, Senior Research Analyst at Trade the Chain, joined by CJ, also Senior Analyst, but at Market Rebellion. And we are here to break down everything going on in the crypto market. Obviously, yesterday was FOMC, which was highly anticipated. We talked about it a bunch. I mean, every financial publication and media group had it pretty much blasted out. Jerome Powell's press conference was a bit unexpected. It was both expected and unexpected in many ways, which CJ and I will discuss. But obviously, prices are more or less flat for crypto and down for equity. So just looking at quickly the crypto market, surprisingly enough from yesterday's, FOMC announcement, we are up 0.75% for total market cap. Bitcoin is up just under 1%, ETH up 0.25%. And sentiment isn't horrible. Both Ethereum and Bitcoin daily sentiment is bullish. And we do have some outlying coins, several are, performing well in terms of sentiment as well as price action. But, the market is very choppy and has obviously come off of the low highs this morning. And before we dig into the charts, just to quickly cover with you, well, I guess for some reason this doesn't have the federal interest rate announcement on it. So my apologies there. But the interest rate hike yesterday was 25 basis points. But the interesting thing is, CJ, I'd love, kind of your take before we dig into the charts a little bit, is Jerome Powell seemed to indicate for the first time that a 25 basis point hike or any hike is seemingly unlikely in the next meeting. He was pretty, adamant about, this is not me saying there will not be another hike, but they basically changed their language to imply that they're thinking of no longer hiking rates further, which I think was certainly a boom for the crypto sector. But we're seeing equities react pretty bearishly and obviously lower than the lows yesterday. So did anything stand out to you from Jerome Powell's press conference? Any specific language or, what he was saying? Or did you just kind of hear, it's the life is exactly the same as it was on Tuesday as it is today? It seems like, some people say yesterday was a nothing burger. Some people say there was a little bit in there. What are you thinking?
I think the Federal Reserve has been quite transparent with, saying what they're going to do and then doing it over, the past month or so. So I do think we probably see one last hike of 25 bips. And if we have just a stopping of increasing in rates, then I think that actually could potentially be a catalyst for further downside price action. And like a lot of the drawdowns that we've heard a lot of people talking about. Now, if people interpret that as being bullish as we kind of go through the last rate hike, then I think it would be actually probably the opposite is what plays out in reality, which is you get a severe downtrend despite the fundamentals and the interest rates becoming looser. So, that doesn't have a whole lot to do with how I'm going to trade it. Obviously, you got to be careful and manage risk, but that's kind of been my overall view on the Fed and the market is if we stop rates and people go back to, namely shorts, go back to a more neutral perspective or a more neutral positioning collectively, that's when I could think you could see a lot more vulnerability in the stock market. But as of now, despite the past couple of days, I'm still not ready to necessarily give up on this uptrend in the S&P. I'm not long, but those are kind of my general thoughts. I know I went a little bit on a tangent aside from just the Fed, but those are my general thoughts on macro and what we could see in the economy and in the stock market.
And just to follow that up, and I do tend to agree with you, and there's an interesting chart that I think is worth mentioning in relation to Bitcoin. We don't have too many examples of the federal funds rate increasing and decreasing throughout Bitcoin's history, but we do have a little bit of information there. And I think so. It sounds like, CJ, what you're thinking is once the market is fully, it's fully transparent that no more interest rates will happen, meaning we don't really know when they're going to cut, but we know that it's going to, obviously top out. And they said yesterday, their desired restrictive rate was 5 to 5.25, which is the current rate. So they're implying that, but they're obviously not driving a, stake in the sand or flag in the sand and saying rates are done here. But, when rates do come off, just to kind of pull up this chart, like I said, we don't have too much example, but, last time interest rates rose, Bitcoin was, here we go, interest rates rising, Bitcoin obviously on the decline, Bitcoin rose as it is now, with the final, with the topping. And then once interest rates started to decrease, so did Bitcoin. So I'm not saying that this is going to happen the way it is on this chart, but, talking about what CJ and I are discussing now, there is precedent to say once the federal funds rate is topped and they are pulling back on the federal funds rate, there is some bearishness to be had in the charts. So and obviously low interest rate environment, very good for crypto. So we have that to kind of hope for once interest rates are back lower. Go ahead, CJ.
Sorry, yeah, just to interject though, but I think that when you look at the 2019 era and when we started seeing decreasing rates, that was, pretty close to the top of that echo bubble. So,
yep.
It's kind of been my opinion that we're not going to see all-time highs or even a retest of like the 50,000s for the rest of 2023. I think this is more of just an echo bubble as opposed to the start of a new bull market. And when you see a decreasing of rates, there's kind of like, to me, that becomes the last bullish catalyst. There's nothing necessarily that could keep the market going. But then again, we're going to have to really see where the positioning of long speculators are or short speculators to make a more apt decision. But it could end up being very similar to 2019. And that's been the playbook that I've been using throughout this uptrend. So
here's another chart that I like. Oh, go ahead, CJ. Sorry to interrupt.
I was just going to ask if you had any thoughts on, this rate discussion as well.
Yeah, so one of the things that Jerome Powell said yesterday, which caught my ears, and I've been talking about this for quite some time, and it relates to global central bank balance sheets. And just for simplicity purposes, in the teal, or I guess teal, light blue, whatever you want to call it, that is the United States central bank balance sheet. So one thing Jerome Powell did say is once rates do top, they plan on decreasing the balance sheet, which I thought was a fascinating tidbit because, this is even, I think, a better signal for general market movement as compared to the federal funds rate. Is when the central bank balance sheet is declining, Bitcoin has declined as well. When the central bank balance sheet is rising, Bitcoin has also risen great lengths as well. And if we time up, obviously, we started to bottom well before the central bank balance sheet bottom, but obviously central bank balance sheet going up, provided another boom for the market. So in my opinion, I think I think you can't just monitor federal funds rate. You can't just monitor balance sheet. I think you need to do both, but understanding the context for me is very important. And I've even said this on the Bulls Bears blockchain show, and we've talked about it before, is if central bank balance sheets are rising, I'm bullish on pretty much all risk assets. If they're contracting, then I'm pretty much bearish on risk assets. And recently they've been rising, but obviously, as of recent, and we don't have data from since the 22nd, so it'll be interesting to see how that comes in. Right now, seemingly contracting. So I think focusing on central bank balance sheet in addition to federal funds rate is going to give you an added edge rather than just saying whatever federal funds rate does, I'm trading this way. Does that make sense, CJ?
Oh yeah.
Cool.
Yeah. For me, I mean, that's what I'm going to be looking at is just a lot of the liquidity in the market in general, and then pair that with a combination of large speculator and retail positioning. And those are going to be like my keys or main indicators that I'll be looking at to determine the likelihood of like potential downside price action. Because I think we could see maybe a rougher start, maybe a rougher end to the second half of the year than how favorable and bullish the first start of the year is. And it's kind of ironic because when we had like the 2023 predictions from a lot of major banks, a lot of folks or a lot of analysts had predicted very negative start to the year, a very dramatically, almost a crash in Q1. And, we got the exact opposite. We got a really strong rally. And so, and then the anticipation was a recovery by the end of the year. And I think, throughout this entire rally and what we've seen, folks have just been too bearish in the short term and not bearish enough in the long term, in my opinion. But that goes into
recovery is relative too, because I mean, like I considered 16K to 30K a recovery, but when you look at it with 60K or 69K thrown in on the left side, it looks way different. You know what I'm saying? So I do agree with you. I think the people who are expecting all-time highs or, 50K by December are a little bit, crazy, especially with so much uncertainty and lack of, transparency in terms of how data is affecting things today. But if price is 30K by the end of the year, we've still recovered, and we're still above, the lows. So I'm not harping on you for saying that. I'm just saying, like, some people will still say Bitcoin hasn't done anything this year, and I'm like, well, we're 2x off the lows, So it's also about, looking at it from a relative stance and saying, we've still done very well if we can hold these levels. So, but digging in, I think, to price action, let's go ahead and start, discussing charting and what's going on. So ever since, and just we've talked about this before, this is classic market structure here. So swing failure pattern, reclaims the low, higher low, or higher high, higher high. So right now, in terms of just basic market structure, this is what you want to see. And you want basically this to be a repeat of this. And so you want price to hold this level, maybe chop around a little bit, and then reclaim the 29.3 level, bounce up, and then get back up to this level. So I think that's where a lot of people are targeting. But where it gets scary and where it can break down is, of course, people trying to trade into another swing failure pattern and reach the high, which means that if the 1 hour estimated 200 moving average fails, then I'm pretty sure we're going to come right back down to these lows, which coincide with this range right here. So I don't really have anything long-term on Bitcoin. I honestly thought that we'd get a little bit more clear language from Jerome Powell. That man is a master of saying nearly nothing while, speaking for 30 minutes. So, and the funny thing is, same price as we were on Sunday, so nothing too crazy has happened in the chart. CJ, are you seeing anything from the Bitcoin chart? Any indication? I mean, right now it's tough to adamantly say what you feel is going to happen on the chart, because I feel like that, if we just look back to last week, it's been absolute nonsense on the chart.
Yeah, I'd love to share my chart and what I have on Bitcoin on the 1 day chart. So yeah, I'll switch to that. So to me, I'm trying to keep this very simple. Bitcoin is starting to trade a little bit more like gold than the S&P, which has been...
And gold hit a new all-time high yesterday, correct? Oh yeah, it's right there.
Today, yeah, it's been going up quite a bit. So that's been a very popular trade, and something that has continued to go up, at least in the short term. But with Bitcoin, I'm just trying to keep it very, very simple. I don't want to discount the importance of this higher low, but we are still dealing with this lower high, in my opinion. And so from just a very classical Dow theory perspective, I have shorts in various altcoins that I'll talk about in just a minute. But the area in which I'm going to be concerned a little bit about those positions is if we break to the upside of this symmetrical triangle, like what you had said, Nick. When you hold that support, you were looking on a little higher time frame, but when you hold and get above that resistance, typically that is an indication that we have a potential to run the highs once more at 30K and then maybe even 32. So those are things that I think from the short perspective that I'm really guarding against. But as of now, I'm kind of still approaching this as just another lower high. And as long as we don't break above this downward sloping resistance level, then I'm just going to kind of maintain the bearish bias, looking at the first lower high after 80 to 90% uptrend. So that's not to be ignored. And if we start breaking down like this, that's an interesting area. Now, to be very clear, I never short Bitcoin. If I have a bearish view on Bitcoin, I'll always express it through the altcoin market, because I think not only do they have less market participants and are going to have higher beta to the downside, but they're just not as strong fundamentally. So yeah, those are ultimately the two situations, kind of very similar to Nick.
Quick question for you, just as I'm looking at your chart. So I'm looking at like the high that was around mid-April, April 14th, 15th. Obviously, tough to tell whatever it is on your chart, but I'm also looking at the high from that February 15th, 16th. And although the market structure is not the exact same, it is very similar. Higher high, lower high, and then it dumped. So, I mean, if you drew that symmetrical triangle, I think from February 14th to March 1st, be a pretty similar formation. Do you think so? And does that affect, your thought process in terms of us potentially heading down for a correction? I know it's, we're just looking at charts and candles here, but, I'm seeing, the end of April looks very similar to the end of February.
Yeah. I mean, yeah, I guess you could do something like that. Yeah, I mean, if we break that level.
Because like sometimes what I try and do when I can't make sense of anything is to go back and look at fractals and be like, okay, price did this, and here was the environment. And I mean, not much has changed since the end of February either. Inflation has been coming down, rates have been rising. I guess we didn't have a full-blown banking crisis at that time, but it was certainly brewing. So, I'm not saying I'm just kind of looking at it as purely academic purposes. It's a very similar formation that we dumped pretty hard on. And clearly equities are dumping, which we'll get into in a second. And we have noticed that crypto will, tend to lag equities, on a sometimes multi-day basis as well. So if equities are on the downturn and we're seeing that, it brings a little bit more fear to my trading than I think, optimism.
Yeah, for sure. And I'm not trying to use the symmetrical triangle or anything to predict direction. I think it's probably 50-50 whether we break out or break down of this particular structure. I know from a CMT perspective, most would say that when you get a symmetrical triangle, you're typically looking for continuation in the existing, in the trend. You're looking for continuation of the existing trend in the symmetrical triangle. But like I said, I think it's 50-50, and it's we have a nice way to structure risk and reward now. So I would like to get into some of the assets that I am short.
Sure.
Like I said, I don't want to discredit the importance or significance of that high or low. But yeah, if we start getting above these levels and knocking out some of these levels, then yeah, I will look to cover shorts. Not necessarily play to the upside, but just look for maybe another lower high kind of at these higher levels up. But overall, I think that's one that, ultimately we're looking at targets of filling in some of this technical inefficiency anywhere from 20 to ultimately like 14 cents. If we actually do have like the sell in May and go away, then I think that these type of targets over the next 2 months are pretty interesting. Another one we talked about last show, which we are still.
That was a good short that we caught there. So I forget who that community member was, but thank you for bringing that to our attention, because I do know that we had a pretty good trade on that.
Yeah, I mean, I didn't really I'm still holding it. We did have the initial move right down. As you can see now, I'm taking a little bit of heat on it, but overall, as long as we don't run those highs, I still think this is another candidate for a slow bleed and, levels taking 160 or even 120 into account over the next 2 months. Being said, if we start running these highs, there's no reason for me to still remain in that trade, because if you're shorting, typically you don't want to be shorting while price is making new highs in price discovery, because that's how you just get wrecked with asymmetric liquidity and whatnot.
Pepe comes to mind for many on that one.
Oh, we'll get to Pepe. Final one that has worked the best out of these 3 shorts thus far has been Inject, or INJ. Typically you'll see a lot of short squeezes once everybody piles in and you get a lot of negative funding. You have a second kind of run at the highs, and once you start to see weakness from those highs, that's when I like to start thinking about short trades. Another example of this in terms of assets that made that kind of similar double top back in earlier part of the echo bubble was Phantom. So I don't expect INJ to do this dramatic of a sell-off. I'm sure that would be great if we got it for a short position. But, I think that from a technical perspective, if you were just to look at the chart at, just from this perspective, Phantom looks a lot similar to what INJ is putting up right now. So we'll see. Either way, we have defined risk above these levels. And, I think in the commodity markets, just from another technical perspective, you're beginning to see something that's similar to Phantom as well as INJ, where you've had, the first bearish engulfing candle, the first sign of significant weakness, but then maybe a second run at those highs. And if we see weakness from a rejection of a second run at those highs, that's where I'm going to be looking to get very aggressive with shorts in sugar as well, because this is a hockey stick, and I think this could be one of the best opportunities for a short trade throughout 2023. If we go back to 19 or 18, that's pretty good. But those are the general setups that I've been looking at. And then, of course, Nick, if you have any comments, would love to hear them. And then we can get into Pepe as well.
Yeah, I actually wanted to just pull up the classic psychology of a market cycle chart, which is what I'm doing right now. So let's zoom in a little bit here. Can I not zoom in? Oh, there we go. So what CJ is talking about, and when you like just talk about the INJ or sugar chart, hockey stick up, right? Bounce down, late shorters get wrecked down here. Then you have the complacency bounce, right? The complacency bounce will typically not make it to the equal highs. It'll get cut down, around where, where the actual range is. And then you have your deviation up here. So the complacency bounce is kind of what CJ is discussing is shorting into that, or if it is, proven itself not to be a complacency bounce because it is, either taking or meeting the highs, then you would obviously cut, depending on what your risk is. So I just wanted to kind of add that in as just an educational point, because CJ is 100% correct, but this kind of gives you the, the true psychology of the market cycle. So I'll close it out on that topic there, because I think CJ did a fantastic job. But one thing I wanted to also just quickly go over is, equities, and the fact that, I'll kind of get rid of these lines because obviously draw them for the TTC community on what we think is going to happen. But, just kind of, I'll go back and forth on the equities and Bitcoin chart, and let's look at, just the key differences. And although there isn't much correlation here, anyone who's telling you that crypto has not been lagging equities is I think lying to your face. So, we have, relative equal volatility on the charts, but obviously crypto moved higher yesterday and equities moved lower. Now, equities are at a very important area as it swept these lows today, meaning that if it loses these lows, then it is just going to pretty much rocket down to 4010 and potentially lower if it breaches, obviously, this level as well. So although I'm not trading Bitcoin and Ethereum strictly based on equities, I am still monitoring the equities chart, because I do believe that if we get a steep drop and a pretty ugly drop from equities, Bitcoin and Ethereum and the rest of crypto as a whole is going to have a very, very tough time holding their salt, just due to the general risk off perspective. So one thing I just want to mention this for people, because, we have seen the lag take place. And I guess I'll bring CJ in as well. And, CJ, are you kind of, we've talked about this, the correlation's gone. So do you think that, just kind of for academic purposes, because this is kind of what I'm touting right now, do you still believe that there is that lag, that if equities like NASDAQ, S&P 500 start to really pull back, that crypto will have a very tough time staying steady and holding its current price levels?
I mean, that's what history would suggest. We've seen a little bit of decorrelation slightly in certain instances, like, the banking crisis narrative, as well as trading a little bit like gold. But I also think Bitcoin's still trading along with equities, NASDAQ and Qs and things of that sort. To answer the question very simply, yeah, if we go risk off, you see things like the dollar start to recover, gold going down, as well as equities going down, like Bitcoin will likely just follow in that correlation, especially when you look at some of these altcoin charts. Like I said, it might be 50-50 whether we go up and test the highs or make new highs in Bitcoin. But when you look at a lot of these altcoin charts, they are appearing a little similar to maybe not 2021, but maybe some of them. But, I remember when you said this to me probably a couple weeks ago at some of these altcoin charts, you're saying they look a lot like 2021. And I don't know how sustainable that is over like a 1 month or 2 month period. So those are just things I think you need to be cautious of. But to your initial question and the correlations, yeah, those are going to be very, very important. And the tough thing is, like, when Bitcoin dumped earlier in the week, when it had its most negative day, whenever that liquidation event was, ES was actually holding up. I think it was up around 30 to 50 basis points on that day. So I think the thing you got to look out for is Bitcoin showing relative weakness when the S&P is just kind of hovering. And I think we did just have a break of maybe new intraday lows while we were talking here on BTC. I think we're down.
Oh, did we? So I guess let me quickly just to cover DXY, because you did mention it, and I saw some fascinating action on the chart. Is that we've swept the low 3 times since April, and that low has not been met since February. So typically, after 3 sweeps, you're expecting what we call power of 3, and you're at least running the top of the range. So if that is to be the case, then I would say DXY running 102.5, potentially getting up towards 103, and this estimated 200 moving average on the 12-hour chart. It's definitely something to watch out for there. I will say if we rise up, get cut halfway, and then are back here for another sweep, typically you'll expect that 4th or 5th tap to break. But 3 sweeps, definitely something to watch out for in terms of the dollar holding its lows. Finally, just want to quickly cover ETH, just because, usually Monty kind of picks this up for us, but he's unfortunately away today. Is ETH BTC is, man, I mean, it's been having some insane volatility. Every bull and their brother was shouting from the mountaintops right here, because Pepe, meme coins, gas is high, ETH is going to outperform BTC. Well, what does it do? It gets freaking, absolutely shot in the head right at the 4-hour estimated 200 moving average, and slips right back down to this support level, which, by the way, we've been trading at since early March. So nearly 2 months now. So when it comes to ETH, I still believe that Bitcoin will continue to act stronger. If we just kind of, 1-day chart for ETH, 1-day chart for Bitcoin, let this pull up. I mean, obviously neither are very attractive, but I will say to you that, this is pretty much quintessential bear flag right here. Do you agree, CJ? I mean, I'm not going to lie to you and say Bitcoin looks great right here with a tweezer top daily at 29.3. But ETH is pretty much just consolidating in a range after a blow off top. And that to me is typically not what you want to see.
Yeah, ETH BTC looks to be putting in a little bit of a bottom, but
it's been trying. But I mean this wick right here is scary. So, and then I look at the ETH chart, I'm like, this range is just not pretty. So,
yeah, I mean, like I said, I think you gotta the way I'm approaching it is I'm trying to keep it as simple as possible and just acknowledge the fact that this is a lower high after, a significant uptrend. And I think you always got to be cautious when you see something like that, or at least what I like to do is wait until the trend makes a new higher high above the previous lower high. And that's kind of like a green flag, or I guess like a check mark, something that I would like, or something that would at least make me close shorts. But as of now, yeah, I don't have like strong opinions on ETH BTC or ETH. I think it's interesting that ETH BTC looks like it's trying to bottom, but then again, it depends on how strong this trend is going to actually be. And like I said, I think it's probably 50-50. It's a tough one.
Yeah, and I agree with you, and that's why I'm torn. And I even said on the B3 radio show on Tuesday, I'm like, this is one of the few times you'll really hear me say this, but I really don't have an idea of where things are going to head next. I mean, if you're trying to read the tea leaves or, do whatever kind of predictive analysis, I mean, looking out beyond an hour has been extremely difficult. And I've been kind of waiting for a large move to kind of give us a further indication. My bias has been long, but, since we got this blow off top, very ugly recovery, if Bitcoin closes the daily looking like this, I'll probably start adding shorts, especially if it's below the 1 week VWAP, which it is hovering above right now. So currently, I'll just kind of go on a limb and say I'm leaning bearish right now, and I think that it is more likely than not that Ethereum and Bitcoin at least retest some of these previous range lows, which means probably close to 1,700 for ETH and probably close to 26 or 27 for Bitcoin, in my opinion. So I guess before we kind of move on to some fun stuff in the market, CJ, do you have anything kind of on that topic? I know I'm saying that reading the tea leaves is difficult, but I'm also trying to give a little bit of guidance and indication. I don't want our listeners and watchers to walk away and be like, this guy's just, talking about as much of nothing as Jerome Powell was. I do want to give some indication. So I am leaning bearish due to lower highs, due to potential tweezer tops in the daily, and ETH potentially looking like a bull flag, as well as head and shoulders here. But the verdict's out. So CJ, I guess before we move into Pepe and some of the fun stuff, would you like to opine on directionality at all?
Yeah, I mean, I never short Bitcoin or ETH. If I have a bearish view on those assets, I'll express it via short positions in altcoins, specifically the ones I talked about a few minutes ago. Like I said, probably 50-50. The reason why I'm short is because the risk is very clearly defined to the upside, and I know exactly where I'm wrong. And one edge for me throughout the bear market and what we've seen kind of through certain downtrends is looking for altcoins that go through boom and bust. I really like short trades because you know exactly where the risk is defined going into the trade. That's not always the case with a long trade, or sometimes it's a little bit more difficult. And the other thing that I like in terms of short trades and boom and bust when compared to long trades is you have a very clear target on the shorts. Like, it's just you're looking for where the initial boom began and probably going to see a reversion to that mean. Whereas when you're trading from the long side sometimes and price goes into new highs, or what we like to call price discovery, you never really know when to get out. I mean, you try your best with Bollinger Bands and moving average and things like that, but those short trades, I like the fact that exactly when you're getting out and what the targets are beforehand. But in terms of directionality, 50-50, I lean towards the downside because I think that's where the best risk reward is right now.
Alrighty, you heard it first. So let's cover the hottest coin on the market right now. It seems to be Pepe is the meme coin of the century.
First, let me ask: have you traded this one at all?
So I have not. No. So I'll be completely honest with you. With everything going on in the market, I'm also fundraising for a company that I've been building, which doesn't take anything away from Trade the Chain. For those of you who are listening, always with Trade the Chain. So I was a bit distracted and was like, because I'll be actually, a lot of the fundraising for the company that I had extra money for was actually due to the meme coins from back in February. When the AI meme coins were very hot. So I traded like CAI and several others and made a pretty penny on it. And then, my prediction for this next meme coin cycle was, well, I have a feeling we're going to get something blow off at some point, meaning a blow off top or a big correction. Therefore, I'm not trading meme coins because you're literally playing the lottery. You take $1,000 to the casino, you're ready to lose that $1,000 or walk away with, hopefully 2, 3, 4, 5x or whatever it is. So I was not ready to walk into the casino at that point in time. And so I missed it. But I will admit that I did short it. And a friend's proprietary technology is very good at tracking liquidity and things like that. And it piped a short right at this level. So we shorted it down here, closed out right around here. So that was a pretty good trade. But I will admit I was half thinking along yesterday just due to the initial crypto reaction and Jerome Powell's speech, where the initial indication was more hike. So I knew bullish reaction would come. Didn't know if it would last, but Pepe up, what is it, 60-90% from the lows right now. So I wish I would have taken that trade, but this has been a very difficult one, and anyone who's been shorting it has been getting absolutely murdered. I mean, you've had very small short windows, and they've reclaimed all of the short profits relatively quickly. So I do have this kind of ugly little symmetrical triangle lined out, which, funny enough, CJ, another symmetrical triangle that broke down but immediately recovered. So is this Bitcoin's future? I don't know. But it's been a fascinating chart nonetheless. And I think what is the market cap that we're at right now? Let's check.
Should be like 700 million, something like that. 600-700 million.
Be slow because we're in video. we'll wait for that to load. But what do you? I just gave a quick overview. So what are you thinking for the chart, CJ?
I thought it was funny that funding went to like -1%, I believe, yesterday. Were you watching the funding rates at all?
Yeah, which was why I was like, maybe I should just pipe along, but I was like, I'm not ready. Like, I'm not ready to just be risking because I mean, even if you're like 2 to 5x leverage, you're gonna, the percentage moves are so crazy that you can get chopped in a second. So, we are at 685 million market cap, by the way.
Yeah. Yeah, I mean, obviously, this is going to be probably the same movie that we've seen play out a number of times, whether it's Luna or Luna Classic. I mean, after it crashed, you guys remember when it did like I forgot the decimal places, but it went up like probably 500% after going to zero, and then there was another opportunity to short that boom and bust.
Yep.
As well as Sheeb, or if you look at Crow or Dogecoin, like every one of these parabolic moves, like the case study is that it retraces that move nearly entirely, which Pepe has a very high likely chance of doing. It's really no different from Sheeb or Doge or any of the meme coin pumps that we've seen in the past. Now, it seems to me that market participants who missed out on the initial move were very obviously you hate missing a move like this, but that doesn't mean you need to go straight into action or shorting it. And that's what we saw with a lot of folks that then subsequently got blown out after, a 50% move to the upside. So, what I want to see in order to short this thing is I want to see funding kind of return to a more neutral level, or even people levered longing this, because that's when I think ultimately you run out of buyers in the short term. And perps haven't been listed on my main exchange, KuCoin, yet, so I can't trade it regardless. But I do think this is going to be one of the best. We will look back on this trade as probably one of the best short trades of 2023. But obviously, being early is just the same thing as being
But
wrong.
when do we short,
Exactly.
CJ? I need you to tell me exactly what price, exactly what where I'm targeting. I've just to kind of throw it out there, these meme coins will typically run on magic numbers, so to speak. So if we look at the chart, I think this blowout, that well, not really a blow off top, but this top was about 500K market cap. And so we're at, close to 700, probably around 700, 750 if you go up here. Well, we're at 685, and that is a 7% move. So yeah, should be, close to 175 there. Or I mean, 750. I'm sorry, 750. Numbers, feeling dyslexic today. So, if we just talk about what that number is, it seems like you're going to have, it's pretty much going to be around $1 billion. Right around here, right around that 200 number. So I think if you are looking to get, short, I would wait to see kind of a blow off top at the 1 billion market cap number. But of course, it could still go higher than $1 billion. I mean, look at Shiba, look at Doge. I mean, they're top meme coins. Pepe is somehow 226. I feel like it's got to be a higher rank than that. It's 685 million market cap.
Yeah, it's I think
685 million. So let's just quickly just do the.
I don't think it's fair. Like, I think folks are saying like, oh, this could be the next Sheeb, therefore it could go up 50x. Like, that's not. I would argue that we're not in the same era that we were in when, like, we're not in the same market conditions as 2021. Just things are vastly different now. Doesn't mean things can't pump and run in the short term, but I don't think that's a fair comparison to say it can go all the way to Sheeb. Sure, I don't even doubt it can't go to $1 billion. I think that could be likely, but ultimately, I think Bitcoin is also going to be another one of the just a major factor for Pepe. Obviously, like if we make new highs,
Yeah,
Pepe will probably do another 100%. If we don't,
yeah.
you could see a 20% drop like we did, 2 days ago or last night.
Oh,
so,
if Bitcoin has a blow off to like 25, Pepe is down 50%. There's no doubt in my mind.
I would say 70%.
Yeah. And then maybe it has a master recovery, but because maybe everybody's trying to soak up Bitcoin for a nice little recovery trade. But I definitely agree with you. Yeah, I mean, if there's some serious volatility from the majors, it's definitely going to reflect. And Pepe right now would be a 67th market cap coin on CoinMarketCap, just based on current market cap. It's got the same damn market cap as Sui, which launched yesterday as an L1, and it's got a higher market cap than Optimism, which is kooky. And there's your favorite Luna Classic there, CJ.
That was such a good short back in the that was one of the best opportunities of the bear market, I think, in terms of short trades, because if you missed the initial Luna short to zero, like, it still gave you another opportunity, which
and people were still shorting like down 99%, I remember, which also is insane. Because if anything's up 100% or down 100%, I'm certainly not aping in blindly. So, but just to talk about the chart, I mean, I drew some lines here. So if you are watching and you want to just kind of recreate, what I'm looking for in terms of range-based trading for Pepe, if you'd like. But I will say, I mean, just this range itself, just to get back to the previous high, that's an 18% range. I mean, it's pretty. If you're using any sort of leverage, you are going to get blown out quickly on any sort of single hourly candle. It's very likely. So what I would recommend is, do not fight the trend on the meme coins. Do not short early until you're given something worth shorting. And I will say, yes, Nick, wouldn't you short this? Yes, I would. But I've also, if I'm getting a close, above the previous, above the low from this morning, well, I guess technically this is the low from this morning. But if I'm getting, continual closes above, trying to form higher lows and things like that, and I know my drawings are ugly, but nothing is indicating to me right now it's ready to just fall over. Could it fall over here? Certainly, but it's probably likely to throw another wick at you and then drop because everybody and their brother wants to short this. And because there's perp trading and because there's market makers, they can now hunt you. Whereas you're not, typically you just be trading on a deck. So CJ, I see you preparing some charts. Do you want me to pull yours up?
Oh yeah, I love that. These are just funding rates, but I wanted to just mention and kind of laugh at how insane they are. This really only rivals band protocol. I think you probably remember like when we had a Dogecoin pump recently, probably just a couple months ago, and Band pumped as well. And that was like the first pump in Mask as well. So Band in that particular instance went -5% in terms of funding, which is just laughable how many people were trying to short it.
Crazy.
Right? Yeah, it's kind of an anomaly. And then this obviously kind of being a market anomaly as well. I think the largest on Gate.io was, negative 180 basis points in terms of funding. So that's significant, but we're starting to see a slow return to neutral. So what I want to see for that top is kind of just a more return to neutral in terms of funding. That's an indication that people have eased off their willingness to short, or kind of they've kind of given up on shorting. So that's what I would look for in terms of like a checklist item before looking at shorting Pepe, or even having any idea of doing that. Because while we do have some defined risk on the 1 hour and those ranges you've been breaking down, I still think that you got to be kind of careful of these crowded short trades, because there's so many like higher likely opportunities of having a winning trade, I think. But
well, no, I agree. I mean, even if you look at do the quick volume analysis, which is the one of the simplest ways to say are we gearing up for a short or not, is so buy volume was lower, kind of had a complacency bounce right here, so short into it, and then even on decreasing buy volume compared to the pump, we still pumped to the recent highs. So obviously, equal high short on lower volume, this was probably the best opportunity in the book if anybody was willing to take the risk. But we are also seeing that again today, which is worth mentioning. So we are kind of having an equal high bounce on lower volume. Therefore, if we continue to get rejected, that's why I think based on this candle right here, we've seen similar right here where it'll just, climb back up. So I would be patient with it, like CJ said. But I will say, we're starting to get into the territory where, getting a little bit overextended, probably want to look, start thinking about shorts. But in my opinion, there's no reason to dive in. Anybody who has been shorting with any vigor has been getting blown out if you're not closing early. And obviously, Bitcoin is still, surviving at the 1 hour estimated 200 moving average, as well as above the VWAP. And we do know above the VWAP is typically when the trend is still, solid. So I'm not eager to short Bitcoin either. But if we start breaking below the weekly VWAP heading into the weekend, I would probably expect, something similar to this kind of price action towards the end of the week. So that's, just something to be aware of. So I've already said it. My bias currently is short in the short term. And that is mainly because I have a feeling that equities are likely to break down. And if equities break down, I don't think that Bitcoin and Ethereum will hold current price levels. But the good thing is, if we do zoom out, we do have a lot of support on the Bitcoin chart for continued strength. We can make it all the way down to 26.6 and still have, a bullish trend. We can still survive 24.8 and still have a bullish trend as well, due to, that being the high from previously and this trading range as well. So all is not lost if equities, crank down to, 39.30 or potentially even lower. But, you should be watching out for these critical levels for Bitcoin. And I'll pull up the ETH chart just for academic purposes for everybody on here. You want to hold this level for ETH, obviously the 1700 level. And I think, it gets a little bit dangerous if you deviate back into this range, but I think you could probably make it all the way down to like 1600 and still deviate back up and be bullish. So I guess CJ, this would really, if you broke below 1400, I'm calling it quits. I'm saying just walk the F away and come back at a later date. But I still think there's still, a large chance for bullish continuation. Let's draw this trend here. So we have not lost everything yet. We still have this 1 day estimated 200 moving average to hold this up. So no cause for alarm yet. But clearly CJ and I are seeing something that indicates, some likely bearishness in the near future. So fingers crossed CJ and I are wrong. Well, not for our wallets, but, for everybody else's green candles. But, that's really what I'm thinking. So CJ, any final notes in relation to your opinion on the short term or any trades you're looking at before we head out?
I think I covered just about everything. If you guys would like to follow our trades and have just more education in general and daily analysis and updates from Market Rebellion, Monty and I are over there at marketrebellion.com/try crypto. Can sign up and try it for just $1. So appreciate that, guys. We have a wonderful community who, really helps me as well. If you're not watching everything, one of the things that was mentioned, like you said, was INJ. And I had not been looking at that one previously. And so it's nice to have, members catch certain things or, because it's difficult to watch every single asset in certain cases. But either way, I think you guys would really enjoy, and we'd love to have you over there, as well as tradethechain.com and their sentiment service that Nick runs. But yeah, really appreciate you guys watching. And Nick, I'll leave you with the final word, sir.
Yeah, thanks so much, CJ. If you're definitely looking for cryptocurrency community support, guidance, analysis, education, either Market Rebellion or Trade the Chain or both. Both are relatively very affordable and offer both very unique services that are helpful to your trading. So we will be here every Monday and Thursday as usual, hopefully with a more robust cast next time with Alex and Monty. But we'll see everybody later, and feel free to tag us on Twitter or hit us up in our respective communities. We're always available for quick charting analysis, a hello, or an update on what we're seeing in the market. So thanks everybody for joining. See you soon.